Hi, my name is Grace Cisna. I'm the CPA on staff with ProjectionHub, and today I wanted to take a little time to walk you through our Trucking Excel financial projection template. This financial projection template, like all of our Excel templates, has several different color-coded tabs that you can see along the bottom here. When you download the template, you will see 2 tabs in orange here on the left, several tabs in this light blue color, and then additional tabs in green. The tabs in orange include the instructions tab, which we're looking at right now, the investor dashboard, which we'll chat about at the end, and then our light blue tabs are the input tabs. So you're going to be inputting the data to build your trucking financial projection model. So taking a look at the input assumptions tab, you will see cells in this corresponding light blue color, and these are directing you to areas where you need to input or update data in order for the model to build your financial projections. So for example, you will see company name, and you'll fill out the company name there, projection start month, annual inflation rate for operating expenses. There's a category for entering any investment in the business, your accounts receivable terms, if those apply. And then at the bottom here, you will see an area to enter any general business loans. And in the middle, we've got the fixed asset section, which is one of the most important sections for any sort of trucking business. So you'll note that there is already data in these light blue boxes, and this is just directing you to the type of data that we're asking for. It's not necessarily industry standards or our recommended values. We just wanted to show you what we're looking for as you build your own model. So looking at the fixed assets here, you are able to enter the name of a fixed asset, and then the category, and you can select from the drop down, and we have several different categories for you to fill out. You have the purchase price, the life expectancy in years, and the salvage cost, and all three of these help us to calculate depreciation expense for this specific asset. You will enter the purchase month, so which month you purchased it in. If you see 0 anywhere on these models, that is implying that you purchased it right before you start operating. And then with our trucking template, we also allow you to enter a financing amount for every fixed asset that you purchase. So a lot of times with these trucks, you're going to be financing them. So you'll enter the amount financed. In this case, it's 80% of the $100,000 truck. The finance rate, so that's the annual interest rate. And then the number of monthly payments. In this case, 60 is 5 years. Once you've entered all of your fixed assets on the Input Assumptions tab, we'll jump over to the Input Revenue and Cost of Revenue tab. On this tab, you can enter, starting at the top, trucks and drivers. From there, we will calculate out your revenue for dedicated routes, and then your revenue from over-the-road or spot freight trucking. And at the bottom, we will sort of summarize the total revenue and any cost of sales associated with that revenue. So let's jump back up to the top and look at our trucks and drivers. So you will be able to manually enter in this light blue section here the number of trucks and drivers for the first 12 months of your model. And from there, you can tell the model to add a new driver every blank months. And so in this case, we're put 6, and you will be able to adjust that. So we'll increase the number of trucks and drivers at the rate that you choose. In addition to those items, you will fill out the number of miles per driver per day when they're driving dedicated routes. And then you can also fill out the number of miles per driver per day when they're doing over-the-road routes. It will also ask you for the number of days per week of operation, with the max being 7 because there are 7 days in a week. Once we get those basic assumptions set, we're going to move down to the dedicated routes model. So the model is going to assume that first we use your capacity of trucks and drivers to fill dedicated routes, and then anything left over will be over-the-road and spot freight. So the model tells you the maximum number of miles per day available for dedicated routes, and that is your number of trucks and drivers multiplied by the number of miles per day for the dedicated route. And then you will enter the actual number of miles per day that are going to be assigned to dedicated routes. So in this case, it always needs to be less than your maximum number of miles per day. You can set the initial amount, the annual growth rate, and then the model will calculate for you how many drivers are required for dedicated routes, assuming that they're driving, in this case, 5 days per week, 550 miles per day, and there are 3 drivers total. So in this case, 2.73 of your drivers will be assigned to dedicated routes. So 2 of your drivers full-time and 1 of your drivers part-time will be on dedicated routes. You will set the average revenue per mile for dedicated routes, and you can set an annual growth rate there. And you can set your driver pay per mile, and then all these other variable costs per mile. So things like fuel, telephone, tolls, tires, all of those items you can fill in here, and we will calculate out your total cost per mile, and again, set an annual growth rate. So the model will calculate miles per month driven based on the number of days in a month, or the average number of days in a month here, and the number of actual miles per day. And from there, the model will calculate your dedicated route revenue and your dedicated route direct labor, so the driver pay, and then the other variable costs. Next, the model will move you down to over the road and spot freight. So any actual extra miles that are available per day are going to be assigned to over the road or spot freight. So in this case, if you'll recall, we had 1,650 miles available per day for the dedicated routes, but 1,500 of them were used up by the dedicated routes. So the remainder are going to be used for over the road or spot freight. And then you'll set the percentage of available miles used for over the road. Obviously, not 100% of your time is going to be used perfectly. There's always issues with scheduling or just getting the proper routes and schedule for the capacity that you have. So setting capacity somewhere below 100% is going to give you a more realistic model. So from there, the model will calculate for you your actual number of miles per day based on availability. And then it will show you again the number of drivers required for over the road. And again, for these first few months here, it's showing that one of your drivers is going to be working part-time doing over the road. You will then factor in your average revenue per mile. Again, your driver pay per mile, those same variable costs. And then the model will again calculate your miles per month for the over the road, your revenue, and then your direct labor and variable costs. At the bottom, you'll see a total miles summary here. And that's total miles for the month. And then you will see total revenue and total cost of sales summarized at the bottom. Once you have your revenue and cost of sales all figured out, we'll jump over to the Input Other Expenses tab. So on the Input Other Expenses tab, you can enter expenses that are not necessarily related to each individual mile. So for example, you may have per driver or per truck expenses. You could have fixed expenses, and you can also enter per mile expenses here. So for example, you may do some advertising, and that likely is just a fixed amount. So you'd enter a fixed amount here for your advertising every month. We've broken out the first 3 months individually, so you can factor in any startup costs if you have legal fees for getting organized or down payments on any offices or utilities or anything like that. You can enter those in the first 3 months here. And then after that, we allow you to enter just one amount for each of these different time periods here. And that is always going to be the monthly amount. So you'll see we have $1,000 in this column for remainder of year 1, and that will be $1,000 per month. So in months 4 through 12, it'll be $1,000 per month. In year 2, it'll be $1,030 per month. You'll note we've got per driver expenses, so different types of insurance. That's going to be $480. It'll multiply by the number of drivers that you entered on the Input Revenue and Cost of Revenue tab. And there's lots of those per driver expenses listed. Again, these are all examples. You can also enter your effective income tax rate, and that is a percentage of income, not a percentage of revenue. And we always recommend talking with a local tax professional to get a better idea of your tax rate. The last input tab here is input salaries and owner draw. So if you have any salaried employees, they can be entered here, a dispatcher or an owner, for example. In addition, as the owner, you have the option to draw funds out of the business rather than paying yourself a salary. So if you choose to do that, you will enter those here. Once you've entered all of your input tabs, we can jump over to the output. So the at a glance tab is going to be some nice graphs, charts, and summaries for you. And these will help sort of summarize your financial data and visualize it a little bit as well. And then we have the financial statement summaries. So we've got the income statement summary, the cash flow statement, and the balance sheet. And these summaries are all going to show the annual amounts for 5 years of the model. So the income statement is your sales, your cost of goods sold, or your cost of sales, and then operating expenses, and it will boil down to your net profit and your net income here. The cash flow summary, cash flow statement is very similar to an income statement, but includes a couple additional items. So cash from new loans and new investments, that's not revenue per se, but it is cash coming into your business. So that shows up on the cash flow statement, as well as cash paid for those same loans and cash paid for fixed assets. That is going to show up right here on the cash flow statement. The balance sheet is going to show your assets, including those fixed assets, the vehicles, etc. Your liabilities, so any loans, especially the loans on all the vehicles. And then the remainder, after your liabilities are considered, is the shareholders' equity. Note, one of the most challenging parts about building your own financial projections is getting the balance sheet to balance. With our templates, you don't have to worry about that. The balance sheet is always going to balance, so that's not something you have to worry about. The next three financial statements are those same three: the income statement, the cash flow statement, and the balance sheet, just broken out with every single month for 5 years. So if you like having a little more detail, you'll be able to see it here on these annual month-by-month summaries for the three different financial statements. All right, the last tab we'll talk about is the investor dashboard, which is right at the beginning here. So the investor dashboard is new to our version 2 templates, and it is a way for you to try out different scenarios and play with some of the major assumptions of the model without affecting the rest of this model that you've just worked so hard to build. So if you wanted to see, for example, what would happen if you changed your driver pay from 40 cents to 42 cents per mile, you could change it in the light blue sections on the investor dashboard. And then when you scroll down, you will see the original income statement, which is the same as this income statement summary. And then you will see your modified income statement. So if you change some of the assumptions of your model, for example, we changed direct labor here, so that is going to change. You'll note that the gross margin goes down in this version because we increased the labor. And so anytime you change the blue numbers up here, that is going to have an effect on the income statements down below. So that's a great way to see how sensitive your model is to various assumptions. That's also a great way for investors or lenders to sort of play around with your model without affecting, again, all these tabs that you've worked so hard to build. So it's just a neat feature that we decided to add for this new version. If you like this model but need help filling it out or need some modifications, we are always happy to provide those for you. So please feel free to reach out to us at support@ProjectionHub.com. You'll often be working with me directly. I developed this template and I'm always happy to get you some help in modifying it or filling it out, whatever you may need. So thanks for going through this walkthrough with us. And we hope that this template is really helpful for you.